Today, Republicans respond to Biden's $1.7 trillion infrastructure proposal with one of their own, minus about $700 billion. Plus, call it the little engine that could. A tiny hedge fund dealt a massive climate-focused blow to an oil and gas giant. And finally, it's Asian American Pacific Islander Heritage Month, and we dove into the growing wealth gap within this diverse community. I'm Jeniece Pettitt, and this is CNBC After Hours. The Dow closed the day 140 points higher after weekly jobless claims hit a new pandemic low. The S&P also finished in the green while the Nasdaq dipped into negative territory. Elsewhere in the stock market, AMC Entertainment shares climbed a staggering 35% in today's trading. The gains come as a struggling movie theater chain has overtaken GameStop to become the most loved meme stock on the infamous Wall Street Bets Reddit forum, according to a Bank of America analysis. And we got news out of Washington as well. Senate Republicans rebuked President Biden's latest infrastructure plan by proposing one of their own, albeit one with a significantly smaller price tag. The negotiations about an overhaul of the country's roads and bridges have become a game of semantics. Republicans and Democrats have a very different interpretation of the word infrastructure. Pramuk explains.
Senate Republicans put forward a $928 billion overall infrastructure spending proposal today. Now that includes things that they are calling traditional physical infrastructure. It's things like roads, bridges, rails, ports, waterways, water systems. This spending proposal is about half of what the White House has proposed. The last offer that the White House put forward to Senate Republicans was $1.7 trillion. Now that was down $600 billion from the initial proposal that the White House put forward that was $2.3 trillion. The White House is defining infrastructure in a fundamentally different way than Senate Republicans are right now. We have the notion of traditional infrastructure that includes things like roads, highways, airports, water systems, utilities. But the White House is expanding that to include human infrastructure, all of the things that White House officials say we need to get the economy running in the right way. So that includes not only things like education, it includes childcare, it includes care for elderly and disabled Americans. They're calling this a kind of human infrastructure, and Republicans are fighting the notion of putting this into an infrastructure plan, saying Congress needs to focus more on the traditional notion of infrastructure. The White House and Senate Republicans have proposed fundamentally different ways of paying for their infrastructure plans. The White House wants to raise the corporate tax rate. It is currently at 21%. Republicans cut it from 35% to 21% as part of their 2017 tax law. Biden initially proposed raising it to 28%, but he got some pushback in his party and is now saying at least 25% is the corporate tax rate that he's aiming for. Republicans are saying that is a red line for them. They do not want to touch their 2017 tax law.
Remember, in February of 2020, we had the best economy we've had in half a century. Principal reason, the 2017 tax bill. We're not willing to reopen that, but there are other ways to pay for a significant infrastructure package, and we hope to reach an agreement with the Democrats to do just that.
So they're saying they want to repurpose coronavirus relief funds that were sent to state and local governments. These funds are already approved, but some of them haven't been spent yet. They also are talking about electric vehicle user fees and other potential user fees on people for using transportation. This puts Biden in a thorny political situation because he has said he will not raise taxes on anyone making less than $400,000 a year. So these user fees are potentially going to put a bigger financial burden on the people who Biden said he would not raise taxes on. Republican Senate leader Mitch McConnell and Senator Shelley Moore Capito, who's leading these negotiations, have both said that they're open to talking with Biden more and are open to submitting another offer. So we still might see a little bit more back and forth between the sides.
All right, let's get to our sound check. Here's a roundup of the day's biggest action and what top newsmakers and business leaders had to say on CNBC's airwaves.
I suspect a growing trend we're going to see is more Bitcoin mining hash rate moving out of China, moving all over the world. But I expect we're going to see a big growth here in North America, a big growth here in the United States because of how much renewable energy is being developed here and the opportunity that gives for Bitcoin miners.
By 2023, they anticipate that the marketplace will be around $10 billion. And as it is legalized, as edibles are legalized and even cannabis is legalized in more and more states in the United States, the market will grow exponentially.
There's been some projections out there, and the EIA came out with a prognostication that you'd be seeing somewhere around peak gasoline, possibly even this year. And that's not an unreasonable thesis to say gasoline is going to peak. Electric vehicles have a huge role to play in the society and the future of the world. That said, crude is still going to play a very important part.
When I look at the security challenges we have in this nation, there's technical solutions and non-technical solutions, but it goes to this. You don't win the war on crime. You fight it every day. And it's going to be the same thing with cybersecurity. There is no, hey, we won, and you wake up one day and there's nothing to worry about. This is an ongoing battle, and every single company is going at it alone right now.
May is Asian American Pacific Islander Heritage Month. For the past several weeks, CNBC has been showcasing personal stories from people across the diverse population. In another story, the digital video team investigated the growing income gap within the community and how top-line data like median household earnings can often be misleading and disguise the true economic situation facing millions of Americans.
The median household income for Asian households was $85,800 in 2019, but if you break it out, you'll see at the low end Burmese Americans with household incomes of $44,400, less than the median of all U.S. households. And at the high end sits Indian Americans with $119,000. When we add in other Asian ethnic groups, you'll see that the original number of $85,800 might not be as representative as it seems. Asian Americans are the most economically divided racial group in America. While they are more likely to hold high-income, white-collar jobs, Asian American workers also hold a significant number of low-income service jobs.
So most national data sets look at the community in aggregate. And so when you combine it, it looks like Asian Americans and Pacific Islanders are doing well, and often disguises, the realities of what those at the lower end of the economic spectrum are experiencing.
Asian American Pacific Islanders immigrate to the U.S. for very different reasons. Some come to attend college in the U.S. or on work visas because of their specialized skills. Others might be refugees from conflicts. Yen U's family moved from Myanmar to the U.S. in 2009. At 22, she is now the breadwinner for her family. She works 3 jobs to keep up with costs while also attending college. She's had to learn how to handle money on her own.
My parents didn't have the knowledge to, for upward mobility, like starting a business or getting a IRA or like investing.
Many families come to the U.S. to give opportunity to their children. But if the kids have to drop out of school in order to help pay for the rent, that doesn't mean upward mobility for that family.
There's not a quick solution to closing the growing income gap.
It's the responsibility of local municipalities, local elected officials. They know who lives in their communities. I think the answer is really building power for our communities so that they have a stake in what happens to their own communities and neighborhoods.
Before we go, let's get to our numbers round. We'll start with 400. Walmart and Gap are teaming up to create a home decor brand that will launch on Walmart.com next month. The line, called Gap Home, will start with 400 items ranging from bedding to bathroom pieces to decorative accessories. The financial terms of the deal were not disclosed, but the partnerships help Walmart take aim at one of its chief rivals, Target, which has seen great success with its own home products, including its collaboration with former HGTV stars Chip and Joanna Gaines. And for the Gap, the new initiative is the retailer's latest attempt to win back shoppers after its sales took a hit during the pandemic. Next, 577. Consumers took out bigger loans to buy cars in the first quarter. According to fresh data from credit reporting company Experian, the average amount borrowed on a new car last quarter was more than $35,000, a roughly $1,500 jump from the same time last year. And the average monthly payment, $577. Payments for used cars are moving higher as well. On average, consumers paid more than $400 a month on their used car loans last quarter. The higher prices reflect a crippling global semiconductor shortage that is snarling the production of new vehicles. And finally, 2. In a stunning outcome, a little-known hedge fund, Engine No. 1, with a small stake in ExxonMobil, managed to deliver a crushing blow to the oil and gas giant. The fund forced Exxon to accept at least 2 new board members who are transitioning the energy company away from fossil fuels amid ongoing risk of climate change. Activist investor campaigns and shareholder battles can be wonky. They involve complex rules. But the biggest takeaway from this one is that no one on Wall Street thought this could happen. ExxonMobil is a $250 billion company. Engine No. 1's original stake was worth about $40 million. That's pennies in these kinds of situations. But large shareholders like pension and index funds have been taking a big game in recent years about commitment to cleaner energy and climate-focused investing. And now Exxon faces a reckoning in its core business. There's so much more to this story. Go to CNBC.com and download the CNBC app for all of our coverage, along with an interview with Exxon CEO Darren Woods. That's it for After Hours. We will be back here in our home office every Tuesday and Thursday, so be sure to catch us then.